All right. Welcome to another episode of Keeping It Real, the largest podcast made by real estate agents and for real estate agents. My name is DJ Paris. I'm your guide and host through the show. Today, once again, is our monthly series titled Learn with a Lender with Joel Schaub from Guaranteed Rate. Now, Joel is the vice president of lending at Guaranteed Rate, and he's been doing loans at a high level since 2003. And he's got to that level because of what he does specifically for agents, which is he gives back part of his commission to the buyer on every transaction. So last year alone, Joel gave back almost $300,000 in closing costs to buyers who worked with him. And that puts Joel's volume in the top 0.1% of all lenders nationwide. In fact, there's over 400,000 loan officers in the United States. Joel is actually ranked number 137. Last year, he closed 619 sales, his highest amount ever, for $249 million in loans. Already this year, and we haven't even updated the numbers, so these are old numbers, but I'm sure they're much higher now. But already this year, Joel's closed over 70 transactions for over 27 million. And Joel, welcome once again to, oh, I'm sorry, my apologies. Before I get to actually welcoming Joel, if our listeners or viewers are looking to work with a loan officer, we cannot more highly recommend Joel. He's the very best we've ever worked with. He can be reached, by the way, at his email address, which is joel@rate.com. Very easy, joel@rate.com. Or you can shoot him a text message or call him at 773-654-2049. Let's say hello to the biggest Cubs fan I know. Joel, welcome back to the show.
Hey, DJ, thanks so much for having me on. And maybe the Cubs keep losing, I'm going to have to drop that. I am not a fair weather fan, but you can't keep losing as many games as they're doing. So we'll see. Kind of like the market right now. Things are up in the air, right? We talked about it just before we got on, and interest rates are moving, and there's a lot of activity. And so I'm excited to be back.
Yeah, it's a really there's a lot of tension right now, I think, that agents are feeling. There's, of course, we have low inventory. We've got rising rates. The Fed has, changed that. There's a lot of news. There's a lot of, commotion about it. People are freaking out. But I think this is a good time to reset and sort of talk about what's really happening so we can all take a breath. And maybe things aren't quite as chaotic as they are appearing in the media and in the news at the moment.
Well, the big thing here, if you're an agent listening right now, that you're not going to hear when you're looking at the media, right, is that they keep talking about all the rate increases coming down the line. How many times the Fed, DJ, is going to raise rates this year? And I'm here to tell you that most of this is already baked into mortgage rates that we're seeing. Okay. And just think about it. It wasn't but 6 months ago where rates were hovering around 3%, and now they're over 5%. Yeah, the Feds have only raised rates by 75 basis points. So if you're actually following the math and looking at this, you can really pick up new clients and strengthen relationships with your current clients by leading with education and value. And the idea here is that just because the Feds are going to raise rates again several times this year does not mean the day that they raise rates, they call the mortgage company and say, today's the day to raise rates. Most of that's baked in, and we can see that right now that rates are above 5%.
Yeah, so I guess that's a really important thing for our listeners to understand, is that mortgage companies have economists on staff. They know or can pretty accurately predict what the Fed is going to do. And in anticipation of that, they make those adjustments so that they're not caught with their pants down when the Fed does make a decision. So a lot of what we're seeing in the news can create stress and worry for an agent or for a client. But the reality of it is, lending institutions have known that this is coming. And let's also sort of just remember, historically, 5.5% is what is that the sort of current 30-year average, or right around 5.5% these days for a 30-year?
Yeah, a little bit below that. Yep, absolutely right.
I mean, let's keep in perspective that, it's always that thing where it's easy to forget, right? We have such short memories, and it's easy to forget that, well, yeah, we were at these historic lows, 18, 24 months ago. And yes, of course, okay, we're not there now. It's okay. We still have a lot of purchasing power. To me, the bigger challenge isn't so much lending rates, it's inventory. I mean, we can focus on lending rates because this number ticks up, or ticks down, and we can feel good or bad about that. But at the end of the day, if there aren't homes to buy, that to me is the real challenge.
There's going to be an opportunity here right now, and I'm already prepping a lot of my buyers as we film this here today. It's the middle of May, and what we're going to see is we're not going to see rates drop anytime soon. We already know this, DJ. Rates are moving up. However, most of it's baked in, and that means this summer and into the fall when properties are on the market, and maybe they're on the market for 7 or 10 days. That's a lot longer than it's been on the market, and a buyer will have the opportunity, and this is my prediction, to go in and submit offers without so many offers coming in, because all of the buyers that were right on the cusp of qualifying, because they could qualify when rates were at 2.5%, they're gone. Okay. This might be controversial, but we're only going to help so many buyers each year as agents. We're only going to have so many buyers that we help. Going forward, it's going to be slightly easier to help those buyers submit offers that are going to win, because there just truly won't be as much competition as rates continue to rise. And that's an opportunity that I could be very excited about.
You're right. And we have to also remember, again, this short memory is like when rates were that low, it really opened the floodgates for a lot of people who, maybe prior to that wouldn't have been able to qualify to purchase, certain levels of property. And now we're seeing that recede a bit, right? So there was this huge, the floodgates were open. Everyone sort of trampled into the yard, and everyone got access. And now it's like, okay, now we have to limit access, because let's remember what it was like when you got 30 offers on a property. Yes, that was great for the seller, but for the buyer, not so great, right? Not so much fun for the loan officer, not so great. And also for the agent representing that buyer, that was a stressful time. So I actually think, I always like balance. So I would like to see a balanced place where, yeah, maybe rates are a little higher, but at least, there's going to be hopefully some inventory out there. And then you have a few days to actually make a decision on a property, as opposed to, oh my God, I have to submit it, my offer before I even go see the property.
So if I'm an agent, and I'm hearing this a lot, right? I'm hearing buyers ask agents, well, did I miss the boat? Should I not buy now that rates are up over 5%? And the one thing that we got to kind of remember is, if we're renting a home right now and we're renting for, in our market, $2,000 is pretty common for even just a 1 or 2 bedroom property in a nice neighborhood. That's $24,000 a year. Over 4 years, that's $100,000. And that's all money out the window, right?
Yeah.
So we don't need to sell anybody anything as agents. If I'm an agent today and I'm being asked by a first-time buyer, should I buy or should I continue to rent? Just do the math, right? Interest on rent is 100%. All of it goes right out the window. And if you're paying rent, that's 100% rate of interest. It's all money that you don't get back at the end of the year. Whereas rates at 3.5 or even 6.5, that's still a much better rate in terms of being lower than what we're paying in rent. So that's option one that we have as a talking point with first-time buyers. And then the second is that this is not just a straight hill up, DJ. In terms of rates, we know that when they go up, they do come back down. And the best thing about the mortgage business is it is a refinanceable loan, meaning taking the rates that we can get today, and if they go down to 3.5 or 4.5 again in the future, you can refinance that loan, usually with little to no cost if you're working with the right mortgage people.
Yeah, I remember when I bought my first property in 2005, and I think my rate was about 5.5%, maybe a little bit less than that, but somewhere in that neighborhood. I don't exactly remember. And I remember, but it was adjustable. It wasn't a 30-year fixed. And it was, I think it adjusted every 2 years. I want to think it was a 2-year arm or a 5-year arm. I can't exactly remember, but it was adjustable. And it was told to me at that time, rates are probably going to go up. When this adjusts, it's probably going to adjust up. And I went, oh no. And they go, don't worry, because we'll be able to refinance in some capacity within that time frame. We're going to figure this out. Don't worry. You're not alone. You're not the only person who is in this sort of vehicle. And, so my point with all of this is all of these immediate sort of stresses that seem to be the challenges ultimately end up getting figured out over time, right? Like low inventory, it gets figured out at some point. It's stressful today, but it won't be stressful maybe a year from now, looking back at today going, oh, we were being a bit overreactive to it. There are opportunities. There is a lot to do. And yes, as Joel just said, mortgages are refinanceable for indefinitely, right? You can always find, and like Joel said, things are cyclical, things move, things ebb and flow. So right now rates are on their way up, and at some point they'll be on their way down again. And so still, I don't think there's much cause for alarm right now. The biggest cause for alarm, I think, is inflation, right? We've got the Fed's trying to do everything they can to make the price of things come down. And that's the most important thing. And that's really all the Fed's trying to do, as far as I can tell. And that's a good thing.
I love that you say that. And I made a name for myself years ago by doing the refinancing for clients after the '08 crash. And one big tip that I want to share with the agents that are listening, or even just homeowners here that are listening, is that there's always an option, if you speak to the right mortgage professional, to refinance the mortgage with no costs. Okay.
Yeah.
And I want to explain how you could actually do that in under 2 minutes so that you have a leg up when this happens, because I'm already preparing for the next 2 to 3 years of everybody that's buying right now to get a follow-up to them when rates do go down, because it is not just straight up. There will be a time in the next couple of years where rates are lower than they are today when the Fed stopped raising rates. And it looks like this, DJ. Back in '08 and '09, when rates did drop below 6%, right? We're saying, oh boy, it's a bad time now, but we were pretty excited when rates got into the fives. People had rates that were higher, and rates literally did go down to 5%. And banks would call you like crazy and say, do you want to refinance? And the trick there is they're making thousands of dollars on the fees to refinance, right? There are title fees and appraisal fees and underwriting fees and processing, and it goes on and on. So of course, banks have an incentive to refinance a mortgage because of all the fees. So what you want to do is find out what the best rates in the market are. And at that time, they went down to 5%. And I helped clients and I got them locked in at, say, 5.1%. Because if the rate was a little bit higher, they didn't have to pay any fees. And I mean nothing. Right. No underwriting, no processing, no appraisal. And if you're already at a rate of 6.25%, you could go down to 5 and pay a bunch of money, or go down to 5.1 or 5.2 and pay nothing. And so since I was upfront and honest and did the math and taught them, if rates go even further down, we didn't pay anything for this. So let's take the lower rate for free. I literally did hundreds and hundreds of transactions over those years where clients paid nothing. And then when the market heated up, they had a friend in the business. And so that's the big trick, is finding out what the rates are for a no-cost refinance. And believe me, the time's coming. It's not just going to go up and up and up. It may go up a little bit further from here, but in the next couple of years, there will be days and weeks where rates are lower than they are now, and we can refinance. And as an agent, I would be spreading the word.
I think this really speaks to the larger point of having a lending partner that is able to give you these talking points like you're giving our listeners. And I think that this is so critical, because clients see the news, they react, they come to the agent or possibly the loan officer, but probably the agent, and say, oh my gosh, things are going up. I'm freaking out. Agent then needs to have a partner to be able to say, okay, what do I say? And this is exactly what we're really talking about is, the realtor doesn't need to be the expert in lending sort of practices and where things are. But what the realtor does need to do is have a team of people that the realtor can call and say, hey, how do I calm this person down? What can I talk to? How do I phrase this? What's actually happening right now? And to me, that's the greatest value in having these sort of partnerships, is having somebody like Joel to be able to say, okay, let's have this conversation. How can I communicate what's really happening? How can we cut through the noise of the stress of the moment? But let's also talk about the sort of creative ways. Let's talk about appraisals, because I know we're totally switching gears, but appraisals I know are really, this has been very crazy right now with the offers that have been coming in, and then oftentimes appraisals come in under what the offer is, and then there becomes a challenge to sort of make up that difference. We are still seeing a lot of multiple offer situations with buyers. So what's your thoughts about appraisal gap coverage and how agents can start to, tell their clients how to begin anticipating that?
Last month was April, and I know for a fact that appraisals are still front and center on listing agents' minds when they're looking at offers. I had 39 successful closings in April. All 39 were purchases. And to some degree, appraisal was one of the biggest things that we talked about up front when we're submitting the offer, right? Listing agents, when we have a property that's hot, they're almost forcing the buyers to waive the appraisal, right? Meaning, if you even want to compete in this market, tell me that you're not going to worry about what the appraised value is on your financing. And that can be scary for a lot of buyers. It's scary for agents because they haven't seen this. Even if you've been in the business for 20 years, the idea of wrapping your head around appraisal gap coverage can be hard, even if you've heard it before. Okay, so let's go through it, and specifically what buyers do when an appraisal tells you what the fair market value is, but we're willing to pay more than the fair market value, right?
Yeah,
to be frank, that's really what it is, DJ. To say that an appraisal came in low is kind of this, throws it back to the mortgage company like they did something wrong, right? If my client is willing to pay $500,000 for a home and it was listed for $480,000, and all the sales say that it's worth $480,000, but they're willing to pay $500,000, did the appraisal come in low? Or
No.
did the appraisal tell the story of what it's worth? But agents will say, well, I had 5 offers. I had other offers that were higher. The sales support a certain value. So, and I'm on your side, agents. I mean, I get it. So what we want to do is submit an offer designed to win. And if an appraisal comes in a little bit low and a client has a good down payment, the rate won't change. Maybe they have to carry a small amount of insurance coverage for the mortgage insurance. But if you're setting this up front correctly and educating the buyer, I'm having buyers with good down payments go in and just waive the appraisal. I teach them up front. That sounds scary, right?
Yeah.
Yeah, but it's not. If we're willing and we have the money and we're working with an agent that knows what they're doing, we can submit an offer, and we need to win. Okay, if we need to win in this market to get a property, we aren't so concerned if the property appraises 10 grand high or 10 grand low. Okay, we'll either make up the difference with a larger down payment, or we'll have a small amount of mortgage insurance, and the mortgage insurance might be $50 to $60 a month. And talk to your lenders. If you're an agent right now, if you don't know what happens when an appraisal comes in low, get on the phone with that trusted mortgage professional. He knows right now. He or she really knows how to walk you through appraisal gap coverage, otherwise known as mortgage insurance.
Yeah, it's one of those things where this is, again, back to this trusted partnerships for information. I mean, these are what realtors need. And I think this dovetails a great way to sort of wrap up our episode, talking about having a trusted partner that can help educate the client and the agent, so that the buyers and sellers are on the same page. They understand what's at stake, and also having creative ways to get offers accepted when appraisals might be an issue, when we're not overpaying, but when we're paying more than what is asked. So this is why it's so critical to have a good team of lending in partners with you. And Joel, I know you partner with a lot of agents. Can you talk a little bit about, just as we wrap up, why you partner with agents, number one, and then what you do with them?
Well, the big thing here is what I figured out years ago is I was unable to control interest rates. I mean, go figure, here we are now. But I could control the fees that a buyer paid because I was willing to take part of my commission and give it back to a buyer. So I found out early on that if I made a little bit less on every transaction, I could really grow the business, and it doesn't affect the amount of service that I provided. So I give a $1,500 closing cost credit out of my own commission to every single buyer that buys a home where their loan amounts over $250,000. And that usually in the beginning, it really made the difference for certain buyers that just didn't have enough money to pull deals together. And so even though I'm doing millions of dollars a month, sometimes 20 and 30 million, most of it's just back to basics, teaching, educating, and helping agents close just one more deal. And if I can help you close one more deal by giving a commission back to the buyer, that'll then in turn hopefully get them to refer you more business, and it grows. And I created this newsletter so that agents don't necessarily have to have all the talking points. I had an agent literally post this up in their office. And you guys can get added to the list, and it'll give you just some great things that are happening in real time. We do it once per week. Marie, who's on my team, is just an absolute rock star who helps me put this together. And it's a mortgage market update. And you can get added to the list. Just email me, joel@rate.com, and just say, add me to the mortgage list, right? There's a mortgage market update that we do. And it talks about rates, and it talks about things that you can have conversations with just to sound one step above your competition. And that's what it's about, is education, leading with value, and just helping people. And that's what we're about.
Wonderful. Well, that is, and I get your weekly email with rate information, and it's really helpful. And what's great about it is it gives me the exact information I would need, the data points. You post graphs in there, but you also make it really digestible and a quick, easy read, but with a lot of specifics, so that I can go out there and then, be able to professionally have a conversation with a few data points. And so I can say, actually, here's what we're seeing. So definitely encourage everybody listening to get on this email newsletter. Easiest way to do it, just email joel@rate.com, ask to be put on his newsletter, and he will add it. His team will add you to that. And we just want to thank again, Joel. Joel is such a great example of a trusted lending partner. And if you don't have somebody like Joel in your quiver with all your arrows, if you don't have somebody like that who's able to get on the phone with your clients and talk to your buyers and sellers about what's going on, then you need to find somebody like him. If not him, he would also like to speak with you too, if you're interested in working with him directly. So definitely reach out to Joel, get on his email newsletter, but also if you have any questions about what's going on in the lending world, Joel works at Guaranteed Rate. They're licensed in all 50 states. He can assist. And if he can't assist, he'll connect you with somebody that can. But we want to thank Joel for coming on our show every month. Joel is a trusted partner to our show. He's been providing this kind of advice ever since basically we started, and our audience loves it. So Joel, thank you on behalf of our audience for coming on yet again, and welcome back to Chicago. And we also want to, on behalf of Joel and myself, want to thank the audience for continuing to listen and support our show. One thing we ask that you do before you sign off, or after you sign off rather, is just tell a friend. Think of one other realtor that could benefit from this conversation that Joel and I had about what's going on in the rate world right now, and how do we talk about it, in a intelligent way with our clients, and send them a link to this episode. You can find every episode we've ever done at our website, keepingitrealpod.com, and also anywhere podcasts are served. Just look for Keeping It Real and hit that subscribe button. But Joel, we will see you next month. and very excited to continue having conversations around rates and also and beyond rates. Joel is really a marketing genius, so we're gonna not only talk about rates going forward because that's what's leading the news, but going forward we're gonna go back to our basics of, despite the fact that we can't control rates, like Joel said, we're going to give you strategies to, no matter what's going on in the rate world, how you can continue to evolve your business. So that's what we're all about here. And Joel is, we're so grateful to have him be part of the show.
Thank you for that. No, I appreciate it a lot. If I'm an agent right now, before we go, there's a lot to be positive about coming up this summer and fall. As those rates are a little bit higher, buyers are going to have some opportunities. And it's actually a really great thing to have some of the thinness in terms of the offers that are coming in. So lead with the value, be genuine, educate yourself, right? Make sure that you're the person that they're going to, and just stay positive. We're here for you. And I'm happy to be on the show again, DJ. Thank you so much.
All right. Thanks, Joel. And we will see everybody on the next episode. So thank you so much. See you next time.